Hey all, welcome to ShareTreck. This is Raj here. Friends, I was looking at our data on YouTube to look at all the subscribers who are coming from different places and so on. And I found that there's a sizable number of Indian viewers. And I think they are viewing our channel for information on NASDAQ stocks. They might be interested in genomics or AI. And also, India is an emerging market. It's the third largest GDP right now, and it's moving upwards. So I'm thinking that I think it's the fifth largest GDP. I'm not very clear on that. I'll have to check it out. But it is moving up the ranks basically because of a huge population and a lot of industry that can actually replicate what's happening in the US and other places. So the startup scene is also very vibrant out there, and a lot of concepts which we find elsewhere are also replicated out there, plus new ideas. And India is very far ahead in the fintech area. So overall, I think it's a good time to start coverage on India. And I have special experience on India because I've been investing for more than 3 decades out there. I still have a lot of holdings. So I'm going to start a new segment, and I'll see how many of you are interested in that. And it will be a separate segment altogether, apart from our NASDAQ coverage. It will be a separate one. All the thumbnails will have the disclaimer out there or title out there, which makes it clear that it is Indian Stock Exchange, so that if you're not interested in those, you can continue to look at only the ones that are for NASDAQ. And also the other important thing is that there are ETFs in US which are based on Indian stocks, and also we have ADRs of Indian companies which are also available for you to buy and sell. So I think that everyone would find it very easy, and geographical risk dispersion will also become possible with exposure to India. So with that said, let's get started. Welcome back, friends. Today, I would like to focus on a company called Wipro because it has declared what is called as a 1:1 bonus, which is again a unique feature of the Indian stock market. I'll explain what a bonus means and how it will help the stock, and why a bonus is issued and how it is issued, how it differs from a split. So I'll explain all those things to you. And I would like to start with a disclosure that I have a portfolio of investments in India. It's both mutual funds as well as stocks. And in terms of stocks, these are all stocks which I bought when I was working in India many decades ago. And even after I left India, I converted that into a non-resident account, and I've been following the stock market and making interim purchases from time to time to trim the portfolio and enhance the portfolio, going with a philosophy of buy, hold, and prosper, and it has worked out very well. I'll share all of that with you in a separate video. I'll share my portfolio in a separate video. But for today, we're going to talk about Wipro, which is also available as a ADR or American Depository Receipt in the United States under the symbol WIT. Wipro is an IT conglomerate, and those of you who have worked in IT sector would know 3 or 4 big Indian companies which are involved in there. One is TCS, other is Infosys, and then you have Wipro and Cognizant. These are all companies which are Indian tech companies which are operating worldwide, and they are huge companies. And Wipro has declared fantastic results in their quarterly release, which happened yesterday after the close of markets. So that's one point. The second point is the bonus issue 1:1. So let us break it all down. Let me first take you to the price chart for Wipro. So here we are on the price chart for Wipro. And as you can see, Wipro was in the bottom for quite a while, and then it started picking up and it started moving up. This is a monthly chart. So each of these candles is a 1-month candle that you're looking at. And you would also see that I have made a cup and handle target out here. Let us go to the weekly view. It may make more sense. So if you go into the weekly view, it's a very clean cup and handle target that you're seeing out here. And you'll see that we are starting to move upwards, and we have formed a second cup and handle also out here. So there are multiple targets. So I'm feeling pretty good that it's going to reach the target of 733.20. When I say 733.20, I'm talking about Indian rupees out there. If we were to look at it in the US context, I think we just go into the WIT stock, which is in the I think New York Stock Exchange. So here also you'll see that we have cup and handle format, and it's there's a price target that we could do for the US side as well. But for now, I am going back into the Indian side of Wipro, and I will use that chart in order to talk about it. So here we have the cup and handle pattern, and we have the upward movement. And if I was to move it a little bit more, then you can see a secondary cup and handle pattern forming out here. Our target is 733.35. Momentum is pretty good, above average and picking up. MACD is bearish, but it's likely to turn around. Out here you will see the press release on Yahoo, which says Wipro's Q2 earnings, IT services revenue decline 2%, proposes 1:1 stock bonus. I think the headline is a bit of a misnomer, because revenue is just not the only thing that you look at. You look at margins. So the company reported gross revenue of 223 billion rupees, or $2.66 billion, down 1.0% year over year, missing the analyst consensus estimate of 2.67 billion. That is 0.01 billion is the miss. EPS of 7 cents was in line with the analyst consensus estimate. And their IT services revenue declined 2% year over year to 2.66 billion. And IT services operating margin for the quarter was 16.8% up, and it was up by 70 basis points year over year. So now that is where the money short is. And then you have net income was 32.1 billion rupees, up 21.3% year over year. So that's also good. And total bookings stood at 3.56 billion, with large deal bookings worth 1.4 billion, up by 16.8% year over year. So the company fundamentally is doing very good. It has been paying a lot of bonus on a regular basis, and its management is also pretty professional. Next, you look at the bonus issue. Wipro's board recommended issuing bonus shares to shareholders, including stock dividends to ADS holders, in the rate of 1:1, that is 1 equity share for 1 equity share held, subject to shareholder approval. So friends, what is a bonus? So in the Indian share market, the concept of bonus is that if I have 1,000 shares of Wipro, which has a face value of, let us say, 1 rupee, just for sake of argument, if I have 1,000 shares with a face value of 1 rupee of Wipro, and Wipro declares 1:1 bonus, that means what Wipro will do is it will take money out of the general reserves that it has saved up, and it's going to issue new equity shares of 1 rupee face value, and it will give me 1,000. It will give each shareholder as many shares as they already hold. That is why 1 bonus share for every share held. So I'm holding 1,000 shares of, let us say, 1 rupee face value. Then I will get an additional 1,000 new bonus equity shares of 1 rupee face value. So my holding becomes double. Now, we had discussed the cup and handle pattern, which shows high level of gain, and we had looked at around 730 rupees or something like that in the Indian side for the cup and handle target. Now, on one hand, that is true, but on the other hand, because Wipro is issuing bonus, we are going to have a different kind of mechanics come into play. It's not exactly equity dilution, but there will be more equity shares available in the market. So effectively, if you look at it in a different way, earlier if I had 1,000 equity shares of a face value of 1 rupee, but those shares were trading for 100 rupees. So I had maybe 1,000 into 100, that is 100,000 rupees worth of shares. That is the market value. But when I get another 1,000 shares, 100,000 shares of 1 rupee each, then I have twice as much. So automatically my share value doesn't double. In fact, it becomes half. So in that sense, it starts to behave more like a split, but it's approached in a different way. So what I'm expecting is that because it is a 1:1 issue, the share price of Wipro will go down close to half of it, and there'll be a little bit of speculation and things like that happening until the market adjusts. It could go below 50% of its current price, and then later on it will start coming back up again. Now, why do these Indian companies issue bonuses? The tradition has been that bonus is a way of rewarding the shareholder for holding the shares for a long period of time. So long-term shareholders get to benefit from it. And also what happens is that the money, instead of staying in the general reserve, it comes into your account because you now have the equity shares with you. This broadens the equity base of the company. Therefore, its debt equity ratio becomes much better. This enables the company to borrow more and do bigger projects and grow the revenue. And typically what I have found is that whenever an Indian company issues a bonus, the share price goes down in proportion to the bonus rate. If it's, let us say, 1:3, that is one bonus equity share for every 3 held, then you will see maybe a 25% decline in the share price, and then it will start picking up over a period of time as more quarterly earnings start coming in. So in this case, because it is 1:1, I'm expecting a 50% drop and then a pickup. And over a period of time, those who are holding Wipro would find that their wealth has doubled in terms of their investment on Wipro share. Maybe over a period of 2 to 3 years, it could literally become double of what it became after the bonus, and it will probably reach the same value that it is at now. And if you look at the history of bonus for Wipro, they have been giving a lot of bonuses. Here is my Indian portfolio, and you will see that I have Wipro out here, which is number 3 in my portfolio in terms of weightage. And you will see that the overall gain so far has been 366.68%. So if we were to get into Wipro, and if we look at its bonus, this is the bonus history for Wipro, and you will see that this company has been giving bonuses since 1971, and they had given a 1:3, 1:1, and so on. So people who had been holding Wipro for the long period of time, they have multiplied their money many times more than what they had initially invested. So even if you bought just 100 shares, it would have become 300, 400, 500, and so on, and multiplied. And also, as the earnings go up, the P remaining constant, still the face value being the same, the market price of those stocks goes up. And the latest is going to be a 1:1 issue, which is again going to add to the investor wealth. And now I would like to also show you that they have great dividends out here. Now, in terms of the dividend record, every year they pay dividends. Sometimes it is 2 dividends in a year, sometimes it is 1 dividend. So you could have interim dividend and a final dividend. So there is a whole lot of payback happening to the investor. So these companies are pretty good, and they have their act in place overall. And yeah, so that's what I wanted to talk to you about. Now I'll just give you a quick tour of my portfolio out here. And if any of you are watching from India, and if you want me to talk about specific shares or about these shares, we can do that in a separate segment that I can start later. I have Larsen Engineering. This is an infrastructure company, and as you can see, the overall gain is 426% here. Indian Hotels, this is the company which holds the Taj group of hotels. I bought it during the COVID downturn, and you can see that it has gone up significantly, because during COVID, this stock was beaten down like crazy. And I thought it was very cheap, and I acquired it at a very, very low price of around 150 rupees per share. And right now, the latest value is 2001. I think the latest value is 687 rupees per share. So you can see the jump, 4 times the jump that has taken place in the price. Of course, Infosys you might have heard of. I have that here. Colgate, again, a consumer product thing, and Nestle. Again, that's a very good company to have. Hindustan Unilever, which is a division of Unilever, that's also done well. All of these companies give bonuses. That's the best thing about the Indian stock market, that you have the bonus issues coming in, and then you have a couple of banking companies, and Reliance, which is a conglomerate. It operates into various sectors, including internet, telecommunication, petroleum, and various other products. So it's one of the biggest companies in India. I entered it rather late, but it's already given me some dividends out here. And Tata Consultancy Services and Tata Motors, these are the other 2 holdings. So if you'll see, most of them are all profitable. And I also have a bunch of mutual funds in the holdings. And as you can see here, there's a whole series of mutual funds, and that's also growing. If you look at the overall gain, you'll see gains of 114%, 577%, 700%, 2000%, and so on. Of course, there is a management fee in there, component in there, but these are all historical investments that I have had, and they are growing on their own pace. I have just left it to be there, and it's a sizable portfolio out there. So friends, please let me know if you're interested in the India story, geographical diversification, and I can talk to you about stocks on the ADR, which are Indian companies in the New York Stock Exchange and NASDAQ, and also routes of how to invest in India on select Indian companies. Please put it all in the comment section and let me know if you want more of these videos. If you say yes, I'll start more coverage and we can take it from there separately. This will be an additional feature. Thanks and have a great day. Bye for now.